warahmatullahi taala wabarakatuh, and hello to our beloved lecturer Sir Ahmad Bukhari Muhammad Yassin. Welcome to our presentation. My name is Wardah binti Hastri and this is my group members. As you can see on the screen, we have chosen Chapter 7, which is the Islamic Real Estate Investment Trust or I-Reits as our presentation topic today. Without losing time, let's get started. We start with the introduction. In Malaysia, the market for I-Reits has shown steady growth over the past decade. A real estate investment trust, or we call as REIT, is a collective investment scheme in real estate that combines the best features of real estate and a trust fund. I-REIT is the Sharia version of the conventional REIT. A real estate investment trust, REIT, is a special type of mutual fund. However, other mutual funds invest only in financial instruments. Therefore, it is a vehicle that mobilizes funds from the unit holders comprising individuals and companies for investment in real estate. A real estate investment trust REIT is a company that owns and in most cases operates income-producing real estate. REITs own many types of commercial real estate, including office apartment buildings, warehouse, hospitals, shopping centers, hotels, and commercial forests. Some REITs engage in financing real estate. Next, invest in real estate or mortgage. Purchasing a property can be more than just getting a decent house to live in. One may buy a house, an apartment, or a condominium for investment property. Direct property investment or real estate is one of the investment alternatives which is available for investors to include in their portfolio. It has become one of the popular investment alternatives for diversification purpose. Besides that, enable small investors to take part in the property industry with a modest minimum investment. For those who are interested to invest in property or real estate but cannot afford to do so, real estate investment trusts, REITs, offer a great option to diversify their portfolio. REITs give the opportunity to investors who have limited capital to participate in large-scale commercial real estate without having to enter the market directly. After that, rent on real estate and or mortgage interest payments are the two main sources of income for REITs, which are then distributed to shareholders. REITs are eligible to be sold on stock exchange, so investors can easily buy and sell them at any time. Other than supply and demand law, the share value of REITs is also influenced by their compositions, which is determined by the portfolio manager. Investor will monitor whether or not the portfolio manager has the expertise required for real estate investment and industry. We continue with the next point, which is the advantages of investing in REITs. The first benefit is tax. Better tax structure compared to investing in the property sector directly. There is no cap on the deduction, no age restriction, and itemized deduction are not required to receive this benefit. This provision, qualified business income, effectively lowers the federal tax rate on ordinary REIT dividends from 37% to 29.6% for a taxpayer in the highest bracket. Secondly, liquidity. REITs are more liquid, comparatively simple to turn into cash compared to directly investing in real estate. Units of REITs can be conveniently bought and sold like shares because they are listed on stock exchange. Third, diversification. Diversified REITs make it easy to invest in real estate. These REITs typically own a diversified portfolio, providing investors with a reasonably broad exposure to several types of commercial real estate, often with offsetting risk profiles. Fourth, hedging. Investment in real estate have shown to be resistant to inflation. REITs provide natural protection against inflation. Real estate rents and values tend to increase when prices do. This supports REIT dividend growth and provides a reliable stream of income even during inflationary periods. Fifth is profit. Typically, big dividends in cash and legally enforceable lease agreements provide income. Low correlation with stocks contributes to more stable portfolios. The last one is table of income streams. REITs pay steady income in the form of dividends, commonly known as income distribution to their unit holders. Usually, 90% of the realized income is allocated for this purpose. As a result, REITs have been known for providing a steady stream of passive income to their unit holders. Requiring little monitoring effort, they suit the needs of young people who just entered the workforce with not so high income levels. They are able to earn a regular income at low risk. That's all from me. Thank you for watching.
Assalamualaikum warahmatullahi wabarakatuh. My name is Fatisha Tiramti Zulkifli. Now I will proceed to the next part, which is the characteristic of Sharia compliant REITs. In this part, I will be presenting the overview of Sharia rules and principles used in determining the Islamicity of REITs as outlined in the Guideline for Islamic REITs, issued on 21st November 2005 by the Securities Commission. First and foremost, the Sharia compliant assessment is undertaken by the Sharia Committee or advisor. In accordance with the Guideline for Islamic REITs, the REIT must include a Sharia committee or a Sharia advisor as one of its parties. This person's responsibility is to advise on all Sharia issues. The Sharia committee or advisor is responsible for ensuring that Islamic REITs complies with the investment guideline and providing references and consultation to the manager on permitted investment as outlined in the guidelines. Besides that, the Sharia committee or advisor is responsible for determining whether the Islamic REITs complies with the guidelines. Additionally, it guarantees that the fund has been handled and administered in line with the Sharia principle, as well as any judgment or decisions that have been handed down by the Supreme Court in relation to Sharia-related issues. The Sharia Committee or a Sharia advisor will give certification for the Islamic REITs and will also provide an interim report as well as an annual report. Next, we move to the aspects that need to be scrutinized when conducting a Sharia compliant assessment. First is non-permissible rental activities. Rent is primary source of income for investors, so it is important to make sure that it comes from halal or legal sources. As a result, the following rental operations are listed by the Securities Commission Sharia Advisory Council as being prohibited. The list includes interest-based financial activities (riba), gambling or gaming, the manufacturing or sale of non-halal goods or related goods, conventional insurance, Sharia-compliant entertainment, the production or sale of tobacco-based product or related product, stockbroking or share trading in non-compliant securities, and hotels and resorts. In addition to these actions, the Sharia committee or advisors are allowed to use their own judgment based on ijtihad to identify additional actions that are judged impermissible to be utilized as a criterion in assessing the rental revenue for the Islamic REITs. Second is the rental from tenants who operate mixed activities. When there is a case of a tenant who operates mixed activities, in example, one where its core activities are permitted by Sharia, although there are some other activities that may contain a small extent of prohibited elements, the Sharia advisors must perform a compliance assessment with additional consideration. One of the most crucial factors is that the rental from her prohibited operations can account for more than 20% of the Islamic REITs' overall revenue based on the most recent financial year. In order to prevent investing in a real estate involving obviously prohibited activities that exceeds the benchmark, Sharia experts must advise the Islamic REITs fund management. However, a tenant with diverse activities can calculate the ratio of non-permissible activity rental using many approved methods. The Sharia advisors ijtihad determine space, hours, and other procedures. In the case of a supermarket, for instance, the rental of non-permissible activities such as selling alcohol can be based on the ratio of the area occupied for non-permissible activities for the total area occupied. For example, if the entire rental area is 10,000 square feet and the area for selling alcohol beverages is 1,000 square feet, then 10% of the area is used for the non-halal activities. Thus, the supermarket pays 10% of its rental for illegal activity. As long as it's less than 20% of Islamic rates turnover, 10% rental is revenue is allowed. On the other hand, the 20% benchmark in determining the status of mixed rental income need to be applied in case of renting out to a new tenant. This is due to the fact that the precise rental received from the prohibited activity is still unknown. However, it is prohibited for an Islamic rates fund manager to accept a tenant who obviously engage in activities that are regarded as impermissible. For instance, a well-known casino operator that intends to lease Islamic rate property cannot be approved as a new tenant.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nurin Zukrina binti Rosli. So we will move to the I-Reits structure. Okay, in I-Reits is involve unit holder, trustee, REIT manager, property manager, tenant, and Sharia advisory. Okay, usually the concept used in I-Reits is wakala. Okay, firstly, unit holder will appoint a trustee to serve as a custodian for all the assets. On behalf of the unit holder, trustee will appoint the REITs manager to invest fund in the property. Okay, both the trustee and REIT manager will earn the fees for their services. And the Sharia committee will advise on matters pertaining to the Sharia, such as monitor fund operations so as to ensure it follow the Sharia compliance. Property managers provide maintenance and management service of the real estate. Okay, apart from that, it is important to keep in mind that any profit made as a consequence of investing in real estate, whether that profit come in the form of the rental income or the capital gains from the sale of the real estate, will be distributed to the investor in the form of the dividends. In addition to this, investor will be eligible for the capital gain if the value of the units they own rises in the future.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Azima binti Zaifu and I will present about the differences between conventional and Islamic real estate investment trust. The first is rental income. For conventional, rental for any usage, but for Islamic, only rental for Sharia compliant usage. Next is income for non-real estate. For conventional, there are any investment whether halal or non-halal, such as bond. However, for Islamic, restricted to Sharia compliant investment such as sukuk. Third is business activity allowed. For conventional is any business that give profit, but for Islamic, any business that comply with Sharia only. Next is insurance. Any insurance for conventional and only takaful for Islamic. Other than that is financing project. For conventional, any mode of financing, but for Islamic, Sharia compliant financing only. The last but not least, appointment of Sharia advisor. For conventional is not a requirement. However, for Islamic, it is a must to have a Sharia advisor. I have prepared a video to give a further explanation about the differences of conventional and Islamic REITs. Let's see the video. That's all about the differences of conventional and Islamic REITs.
Now we move to the next categories of Sharia permissible for I-Reits. There are 6 categories that fall under Sharia permissible investment for I-Reits, which is the first is real estate investment, where it was physical land and building. Second is the single purpose companies investment, the private companies whose principal assets comprise the real estate. Third is the real estate related asset investment, where the unit of other I-Reits must be Sharia compliant securities of property companies and Islamic securities of non-property companies. Fourth is the liquid asset investment, where the Sharia compliant securities of non-property assets. Next is real estate non-related asset investment, such as cash, deposits or other instruments convertible into cash within 7 days. Lastly, asset-backed securities where sukuk issued from the securitization of transaction.
Okay, next we move to the example of I-REIT at Bursa Malaysia. Okay, there are 4 I-REIT that listed in Bursa Malaysia, which are Al-Aqar, K-REIT, Aziz REIT, KLCC REIT, and Asalam REIT. Okay, investor can buy and sell I-REIT that are listed on the exchange through their stockbroker. Okay, first we will look at the Al-Aqar Healthcare REIT. Okay, Al-Aqar is the world first Islamic REIT, Asia first Islamic Healthcare REIT, and a benchmark for the development of Islamic REIT in Malaysia as well as in the regions, and was listed on the main market or Bursa Malaysia Security Berhad on 10 August 2006. Al-Aqar was established with an initial portfolio of 6 properties and then has grown its portfolio to 23 property comprising 17 hospital, 3 witnesses or healthcare center, 2 college and 1 aged care and retirement village. Al-Aqar is managed by Damansara REIT Manager Selia Berhad, which is a wholly owned subsidiary of Johor Corporation and supported by the KPJ Healthcare Berhad, and then Amanah Raya Trustee Berhad as a trustee with the objective sought to be achieved by optimizing the performance and enhancing the overall quality of for a large and geographical diversified portfolio of Sharia compliant real estate assets through various permissible investment and business strategies. Okay, second is Aziz REIT. Aziz is Malaysia's first REIT that listed on Bursa Malaysia Security Berhad on 3 August 2005, but later on Aziz REIT was reclassified as an Islamic REIT on 11 December 2008. It has a diversified portfolio of 62 property comprised of 3 office, 11 industrial, 23 logistic, 23 manufacturing facilities, and 2 hypermarket. Aziz REIT is managed by Aziz REIT Manager Berhad and RHB Trustee Berhad as a trustee, with the objective is to ensure that the fund provides a stable and growing income distribution to unit holder of Aziz REIT and ensure long-term growth in the net asset value of the funds. Okay, third is KLCC REIT. KLCC REIT is Malaysia's largest real estate investment trust and is part of a staple security together with KLCCP, forming the only staple security in the country and listed on the Bursa Malaysia Security Berhad on 9 May 2013. KLCC REIT is a diversified REIT with an office and retail property portfolio in its stable, and it's comprised with 3 units prime commercial assets, which the iconic Petronas Twin Towers, Menara ExxonMobil, and Menara 3 Petronas. Okay, the retail podium of Menara 3 Petronas represent the retail segment of KLCC REIT, which leverage on Suria KLCC reputation as a premier shopping destination in the country. KLCC REIT is managed by KLCC REIT Management Sedia Berhad and Maybank Trustee Berhad as a trustee, with the objective of to provide the unit holder with regular and stable distributions, improving return from its property portfolio and capital growth, while maintaining an appropriate capital structures. Okay, fourth is Assalam REIT. Assalam REIT embarked its milestone by being listed on main market of Bursa Malaysia Security Berhad on 29 September 2015 and started with the 31 properties in 2015. Assalam REIT has expanded its portfolio to 54 properties comprising 3 retail mall, 1 office building, 43 food and beverage restaurant and 7 food and beverage non-restaurant assets. Assalam REIT is managed by Damansara REIT Manager Sdn Berhad, a wholly owned subsidiary of Johor Corporation and Amanah Raya Trustee Berhad, with the objective to be achieved by optimizing the performance and enhancing the overall quality of our large and geographical diversified portfolio of Sharia compliance real estate assets through various permissible investment and business strategies.